Welcome to Under the Radar Report. It's great to be back. I'm here with Peter Chilton, our mining analyst. We're talking all things nuclear energy. Uranium and nuclear, the nuclear theme has been particularly successful for Under the Radar Report. We've already made multiples on Paladin Energy and in particular Boss Energy. Peter, why do you think that this momentum is going to continue?
It will continue. We've seen high prices, and the high prices is due to a number of things, which includes lack of investment in the past, a supply shortage, stocks of uranium, which have traditionally been used to make up the total for the power stations, is running out. And another factor is that because of the the instability caused by Russia and other sort of global influences, there's a stronger demand to get your uranium from safe jurisdictions like Australia.
Yeah, so on the one hand, there's supply issues, and on the other hand, demand is increasing.
Yes.
Okay, and I guess implied in the question before, the increasing price of uranium, at the moment, it's US $70 a pound or thereabouts. It's having risen from, what was it before? It was $30, $40 a pound a couple of years ago.
Much lower.
Yeah, $30, $40 a pound in 2021. So what is the break even for a lot of these uranium producing mines in order for them to start producing? What's the catalyst?
Well, I mean, a year or two ago, they were talking about $60 to $65 a pound, that sort of figure.
That's US 60.
That's US, that's US. But I think increasingly people are talking about something closer to 80 because the costs of production are rising, the cost of building a new plant are rising with inflation. So therefore, the cut-off price needed really is rising and it's getting higher.
And I think the big point is, arising out of that is for a new plant from scratch.
Well, there it is. I mean, if you look at Paladin and Boss Energy, they're basically reopenings of existing plants, so therefore lower capital. You start from scratch, the capital is higher, and therefore the hurdle is higher. Therefore, you need a higher price.
And so there are big barriers to entry.
Yeah.
And like in terms of the barriers to entry, how long does it take a lot of time to get a new mine up and running?
I mean, it takes a long time for any mine, whatever commodity. But obviously for uranium, we've got all the safety issues as well. It's even more. So you could be talking in some cases, up to 10 years before.
10 years, right?
I mean, just depends on how friendly the state you're operating in or whatever. But it can take quite a while because you've got to get all the approvals, you've got to find the ore body, you've got to do all the metallurgical test work, build the plant, get funding. There's a lot to do.
Exactly. So moving on to one of the actual producers in the world, because as we know, Paladin and Boss Energy are on the cusp of production, but Cameco is the Canadian company, and that's certainly one of the biggest producers in the world outside of Kazakhstan. Can you just give people a feel for what the market share of Cameco versus Kazakhstan versus these other?
I mean, the market share of Cameco is around about 20% of global production.
Global uranium production.
Kazakhstan is around about 40%. Obviously, with the smaller producers like Boss Energy is just a single digit, probably 1 or 2%. I think Olympic Dam, which is the BHP's mine in South Australia, which produces about 7 million pounds per year, that's about 5 or 6%, to give you something exactly.
Right. Yeah. So Cameco would produce about 30 million pounds a year.
That's right, yeah.
And what's Paladin looking at producing?
They're going to start off with 6 million pounds, or ramp up to 6 million pounds a year.
So at this scale, at that kind of scale, having restarted it, that is enough scale to.
It's quite a good scale. I mean, it's slightly greater than Olympic Dam, or around about the size of Olympic Dam. So it's quite a good scale. Certainly globally significant.
And in terms of the ones nearer production, are they generally the stocks that you support because they're nearer to production?
Well, I mean, the ones nearer production like Paladin, Boss Energy, have done very, very well in share market terms for investors.
What about the other ones like Bannerman and Lotus?
Well, they're high potential as well, but Lotus and Bannerman, both of them, it'll probably take maybe 2 or 3 years before we see them in production.
Whereas for Paladin, it's next year.
Whereas Paladin
It's months.
and Boss, you're going to get cash flow within the next sort of 3 or 4 months potentially.
And that really boosts the
that's-
valuation.
Yeah.
And on the other side of the equation, I guess you've got the nuclear reactors on the demand side. And we had a particularly good graphic in this week's report, which showed the number of nuclear reactors and the potential nuclear reactors, and that the potential is set to double, or the nuclear reactors are set to double. So what's going on like here? How long does it take to get a nuclear reactor up and running?
Well,
and which countries are at the heart of this demand-led recovery?
Yeah, I mean, to get essentially a new power station in production, maybe could take 10 years, maybe. By the time you've designed it and got approvals and started building it. But of course, there are quite a few under construction now. Quite a pipeline that could be sort of be finished in the next 10 years,
right,
or less than 10 years. So, in essence, that always driving demand because there's extra demand from power stations. As far as the country is concerned, it's quite a wide range. I mean, we might think immediately of China and the US and maybe France, but also other countries that use nuclear power and are probably increasing their rate of producing nuclear power. Spain, Turkey, Sweden, Netherlands, Belgium.
So these
it's quite a broad range, really.
Densely populated countries.
Yeah.
Would that be their kind of common denominator?
Look, it could be. I mean, I suppose you're looking at densely populated countries with a sophisticated and smart population, advanced populations,
right?
Mainly.
Yeah.
But obviously, India is also another one which is growing its nuclear power.
And does this include the small modular reactors, just out of interest?
Well, the small modular reactors, it's very early
stage.
There's a number of potential manufacturers of these.
So that's like a future kind of...
So it's a future, but maybe once it gets going, it'll take off. But the real attractiveness of these small modular reactors, depending on the design and so forth, is that they can be installed reasonably quickly. Once you've got the scale, they should be relatively cheap compared to conventional.
But this,
and they're also very safe as well.
It's very much a future, not a future development to look forward.
It's not next year.
Not next year.
Yeah.
And lastly, I want to bring up a company that I find one of the more interesting companies because it's going downstream, so to speak, in Silex Systems. SLX is the code.
Yeah.
What do you know about Silex Systems, Peter?
Well, it's an Australian firm. It's been working on this process to enrich uranium, which basically means you get it into a state where it can be used by a power station, nuclear power station. But it's also been looking at enriching to a higher grade, so it suits the more modern designs of power station, and also suits the small modular reactors, which we've been talking about. So it's very advanced technology. It's completely new. It's not in use commercially anywhere in the world today, but they're in a joint venture with Cameco, who we've already spoken about, to basically to finish all the trials and commercialize this technology. And potentially, it can be this new enrichment technology can be applied globally. I mean, that's the aspiration of Silex. But they've got a joint venture, or several joint ventures with power utilities in the US.
Like nuclear power stations?
Nuclear power stations, yeah, but they want to use this enriched uranium, early customers.
Why is there being pressure on the Silex share price?
I think, like anything, the company isn't producing cash flow at the moment. It's a long or medium-term lead time sort of activity. That said, they've got actually an agreement at their test site in the US to actually start commercializing spent tailings, that's uranium tailings from the old mining, and actually get a commercial operation going. and they've recently accelerated that. So maybe by around about 2028,
Right.
they could actually be
sort of 5 years.
They could actually be a producer themselves, and that would be producing around about 5 million pounds of uranium a year, which is quite a significant production rate. Over
from what we learned before.
Yeah, over a long mine life. And the other thing I should add, in addition to that, Silex has also got royalty agreements. So this technology we've been talking about, they would have a revenue-based royalty on the global application of that technology. So that's a longer-term type of attraction, but it is a very significant longer-term attraction for the company.
And would you say that the stocks that we've talked about today that have exposure to nuclear power, nuclear energy, would they be appropriate for most investors? Would they fit into most portfolios? Or
absolutely. I mean, they're well-managed companies. They're Australian-based companies.
But the valuations, they would be complementary to other stocks.
Yeah, I mean, I think there's a different risk profile, but there's also a different, potentially high reward profile. So I think in any portfolio, it's helpful to have some stocks. You wouldn't be going overweight them, but you'd have a position of these stocks that gives them really good performance, providing you get your timing right.
Well, thank you, Peter. And if you want to check out more of Peter's analysis, just go to our website, www.undertheradarreport.com.au, and see our recent notes on nuclear energy and the stocks that we've talked about. So thank you, Peter. It's been great to have you on again.
Thank you.
Thank you.